Hello, the United States income tax return and the state's trusts. Unfortunately, a time will come when somebody dies. For tax purposes, this can be a very trying and confusing time. For a majority of Americans, their estates are small and less than $5,450,000. If the estate of a person is less than $5,450,000, in most cases there will be no taxes due. Usually the calculation is based on the fair market value of the assets on the date of death or 6 months thereafter. Normally, the personal representative will have an inventory of the decedent's assets shortly after death. However, if extensive gifting has taken place before death, then a worksheet should be done to see if the lifetime exclusion has been reduced. If a sizable amount of gifting has taken place beyond the normal annual exclusion for gifting, a portion of the estate may be subject to a tax. The estates larger than $5,450,000, Form 706 is normally used and must be filed within 9 months after death. However, a fiduciary tax return may be due for an estate, and this is a different type of tax return. The tax form used for this report is called 1041 Fiduciary Tax Return. After death, the income from interest, dividends, sale of assets, pension liquidations, IRA distributions, and other forms of income should be listed on this tax return. The related expenses from administration of this estate are offset against this income. If there is a net taxable income, then the state can either pay the tax or distribute the net income to the beneficiaries to pay the tax. If a trust is involved, then many of the same calculations will be performed. Both the estate fiduciary return and the trust fiduciary tax return should be coordinated to avoid double reporting of income and expenses, dependent on the nature of the will and the trust documents on how complex these filings can become. The final 1040 for an individual should be filed in the year in which the death occurred. If income exceeds the requirements set by the Internal Revenue Service, I usually recommend filing a return in order to start the statute of limitations and to make sure that the Internal Revenue Service does not send out inquiries several years later. A copy of the death certificate is usually recommended to be sent with the final tax return. The final tax return should show all the income received up to the point of death. Please consult your local CPA for more information on this matter. If you are a client or a future client, please contact us at area code 727-733-1026.